Welcome to the deep dive. Today, we're jumping into solid power, that's ticker SLDP. They're right at the cutting edge of the EV battery revolution. You know, this global hunt for the holy grail battery. Safer, lighter, more power, cheaper, all that. What's really interesting about solid power, though, is their whole strategy. It's kind of an Intel inside play.
Yeah.
So instead of like building these giant factories to go head to head with the big players, they want to supply the core tech, the materials.
Exactly. And our goal today is basically to give you a solid handle on how they plan to do that, their unique angle.
Yeah.
And their role in, well, what could be the future of getting around. We'll track them from, University Lab back in 2011, University of Colorado Boulder, actually. They got some early non-dilutive funding, which is key. It means they didn't give up ownership from places like DARPA. All the way to going public on the NASDAQ, December 2021?
Yeah, that jump from a lab, especially with that kind of early grant funding to a public company, that's pretty impressive. Not everyone makes it. So what about those early grants and then landing deals with BMW, Ford, Samsung? What made that stand out?
Well, it's really a validation, right? Those DARPA and RPE grants weren't just cash. They were like a scientific stamp of approval early on. And then getting BMW in 2017, Ford and Samsung a bit later. These weren't just investments. They were deep joint development agreements, multi-year stuff. It showed real serious industry buy-in, trust in the tech way before they were even close to selling anything commercially.
Okay, so strong start, unique vision.
Yeah.
But how do they actually make money with this Intel Inside idea if they're not building the factories?
Right, that's their asset-light model. It breaks down into three main ways they expect revenue. First, selling their own special sauce. The sulfide-based solid electrolyte, that's the core material, replaces the flammable liquid in normal batteries, makes them safer. Second, they license their IP, their patents, their know-how. And critically, this includes manufacturing processes designed to work on existing lithium-ion lines.
So factories wouldn't need a total overhaul.
That's the goal, a huge point for getting adopted. And third, right now, they make money from R&D work with partners, hitting milestones in those joint development deals.
That asset-light thing sounds smart, almost too neat on paper. Got a real-world example of how that works.
Oh, yeah, definitely. Look at the SK On deal. That was, January 2024? Perfect example.
Yeah.
SK On, huge battery maker, paid them $20 million just for an R&D license. Then they paid Solid Power another $22 million to design and install a pilot production line for SK On in Korea. And on top of that, SK On agreed to buy their electrolyte, at least 8 metric tons through 2030, minimum $10 million deal.
Wow, okay, so SK On pays them to learn how to make it, pays them to set up a line, and promises to buy the stuff.
Pretty much. It's, a really clever capital-light way for Solid Power to get its tech out there globally without building everything themselves.
Yeah, it avoids those absolutely massive factory costs we see elsewhere. Okay, stepping back a bit, the benefits. Safer, more range, faster charging, sounds amazing. But we've been hearing about solid state for ages. What makes Solid Power's sulfide chemistry the one that might actually break through now?
Good question. Because you're right, it's been a long road. The key thing with their sulfide approach is apparently its compatibility. Unlike some other solid-state types, it's meant to work with current lithium-ion manufacturing setups, so partners can adapt lines they already have rather than starting from scratch. That could massively speed things up and cut costs, a big potential advantage for scaling.
And that ties into their competitive advantage, their economic moat you hear about, the IP and making it hard for partners to leave.
Exactly that. The moat is their defensible edge. They've got, over a decade building up patents?
Right.
On the materials, the processes. Plus, think about BMW or Ford. They've spent years co-developing with Solid Power's specific tech. Switching now would mean throwing away all that time, money, engineering effort. Those switching costs are high, create stickiness.
Okay, smart model, sticky partners. But they're still pre-commercial, right? Pouring money into R&D before big sales. How do the finances look? Is that risky?
Well, yes, they are operating at a loss. But you have to see that in context. For a company at this stage, developing fundamental tech for a long-cycle industry like auto, R&D spend is the plan. It's an investment. The crucial part is their balance sheet. It's strong, no debt, plenty of cash. That's their runway, their lifeblood for development. But yeah, risks are definitely there. Being pre-commercial is a risk itself. There's uncertainty in scaling the tech up. And the automotive qualification process, it just takes years. Batteries have to be proven incredibly safe and durable. So putting it all together, Solid Power is really like a venture capital investment, but on the public market. High risk, sure, but high potential reward too. It's for investors with patience who believe in that long-term electrification story. Success really boils down to execution, turning those partnerships into actual large-scale supply deals.
So think about this as we wrap up. That global race for the best EV battery is intense. If this Intel Inside strategy works for Solid Power, how much faster could our electric future arrive? Safer, more affordable. Makes you wonder, what breakthroughs are you really hoping to see next in battery tech?